In the 2015 tax year, a taxpayer is awarded tax credits which reduce the taxpayer's tax in the same way as the taxpayer's primary rebate does. Unlike previous tax years where the taxpayer was only granted medical tax credits for the number of medical aid fund beneficiaries for whom contributions were paid, all allowable medical aid contributions and allowable out-of-pocket expenses are also converted to tax credits in 2015. No portion of medical aid contributions or out-of-pocket expenses form a deduction from taxable income anymore. Converting all medical aid contributions and medical expenses to tax credits sounds as if it could simplify things, but the formulas used in the conversion process can be a bit tricky. Let's go through these tax credit calculations. In the 2015 tax year, the first two primary members of the fund, or beneficiaries as SARS likes to call them, qualify for a tax credit of 257 Rand each. Any further beneficiaries qualify for a tax credit of 172 Rand each. The two primary beneficiaries are usually the taxpayer and the spouse, but SARS allows a single-parent taxpayer with children to claim one of the children as a primary beneficiary in addition to the single parent. You may only claim children for whom contributions are paid as beneficiaries. If you are single and add your mother to your medical aid, for example, then you and your mother qualify as primary beneficiaries. The thing to remember here is that you can have two primary beneficiaries and the second one does not have to be your spouse. In addition to tax credits for the number of beneficiaries, a taxpayer may also be granted tax credits for medical aid fund contributions. A formula will dictate how much of the allowable contributions will be converted to medical tax credits. In addition to medical tax credits for beneficiaries and for contributions, a formula will dictate how much of the allowable out-of-pocket expenses will be converted to tax credits. The formulas for taxpayers of 65 and older and the formulas for those not yet 65 or those with a dependent with a disability handicap are slightly different, and we will later explain exactly how these formulas work. Code 4474 contributions on an IRP5 paid by the employer are taxable. In a case where contributions are paid by a pension scheme to a pensioner taxpayer's medical aid under Code 4493 on an IRP5, then these contributions have no taxable element to them. There is no Code 4474 or Code 3810 amount allowed on an IRP5 with a Code 4493 amount. If a taxpayer does not have a medical aid fund, then the taxpayer does not qualify for tax credits for beneficiaries. Firstly, let's talk about an employed taxpayer who receives an IRP5 indicating medical aid fund contribution codes. It is important that we understand what these codes mean, and since there are only 3 or 4 codes we need to worry about, this is a lot easier than you may think. A Code 4474 amount on the IRP5 indicates an amount of medical aid fund contributions paid by the employer in respect of the employee. The thing to remember here is that this amount paid by the employer to the employee's medical aid fund is fully taxable in the hands of the employee, in the same way as a normal fringe benefit is taxable, no matter what the taxpayer's age is. Code 3810 on the IRP5 is the taxable element attached to the Code 4474 amount paid by the employer. As the whole Code 4474 amount is taxable, the Code 3810 amount will be the same as the Code 4474 amount. The Code 3810 amount is added to other income amounts on the IRP5, such as salary, etc., to form part of the taxpayer's total income for tax on the IRP5. Code 4005 on the IRP5 is the Code 3810 amount plus any portion of the contributions paid by the employee at salary source. This means that in a case where the employer pays all the medical aid fund contributions, then the code 4474 amount, the code 3810 amount, and the code 4005 amount will all be the same value. These codes are exactly the same codes used in the 2014 tax year, but how they affect tax in the 2015 tax year is completely different to previous years. To illustrate what we've just said, let's have a look at the income screen in the WinTax 2015 program, showing a typical IRP5 with a column for income amounts and a column for deduction amounts. In our first example, we can see the IRP5 screen in WinTax 2015 showing a sample IRP5 from an employer. We can see a column headed as income received, and we can see a column headed as deductions contributions. Note that the total of 120,000 in the yellow field at the bottom of the deductions contributions column is not the total of deductions or contributions allowed. It is merely a total of amounts entered in this column which could affect the deductions or tax credits depending on legislative limits. In this particular case, the employer paid all the contributions of 60,000 Rand for the year and the employee paid none. We can see the 60,000 Rand amount of the medical aid contributions paid by the employer in respect of our employee as code 4474. And the whole of the 60,000 Rand paid by the employer is taxable in the hands of the employee as code 3810, just like any other fringe benefit. Code 3810 must be the same as code 4474. We can see the 60,000 Rand is added to the salary of 300,000 Rand to make a total income for tax of 360,000 Rand, shown as code 3698 and code 3699 total income. The difference here in the 2015 tax year is that this code 3810 amount is taxable in the hands of employees of any age, including employees who are 65 or older. One more code we need to look at is code 4005. Code 4005 is made up of code 3810 taxable contribution share paid by the employer plus any share of the contributions paid by the employee on the IRP5. In this case, we can see that the employer paid all the contributions of 60,000 Rand, so code 3810 is 60,000 Rand and code 4005 is 60,000 Rand. Just one thing, if you come across an IRP5 from a pension fund for a taxpayer 65 or older regarding code 4493 contributions paid by the pension fund to the medical aid fund, note that code 4493 will appear in the place of code 4474. Note also that there cannot be a code 3810 amount on an IRP5 with a code 4493 amount. There is no taxable element at all attached to code 4493. If the employer and employee were involved in a 50-50 split with regard to contributions, then our IRP5 would look like this. In our second example, we can see that the employer and employee split the total contributions of 60,000 Rand 50-50. The employer paid 30,000 Rand, so the employer's 30,000 Rand is taxable in the hands of the employee. The codes 4474 and 3810 are each 30,000 Rand. The code 3810 amount of 30,000 is added to the salary to make the total income for tax of 330,000 Rand. The code 4005 amount is 60,000 Rand and made up of the code 3810 amount of 30,000 plus the 30,000 share of contributions paid by the employee. Contributions paid by the employee are not taxable. In a case where the employee paid all the contributions through a stop order on his salary, for example, then the IRP5 would look like this. In our third example, we can see that the employer paid no share of the contributions, so there is no code 4474 amount on the IRP5 and no code 3810 amount added to income. Code 4005 is the code 3810 amount plus the share of contributions paid by the employee. Code 3810 amount is 0, so 0 plus the 60,000 Rand paid by the employee equals a code 4005 amount of 60,000 Rand. Before we look at how the contributions and beneficiaries are converted to tax credits, let's have a look at the deduction screen where we enter allowable out-of-pocket medical expenses not reimbursed by our medical aid or by anyone else. In Wintax, this is where we enter our claims for out-of-pocket medical expenses under code 4020, 4022 or code 4023. This is the deductions and claims screen in the Wintax program, which we will use to explain medical claims. When it comes to medical, we have different types of potential claims that may possibly be converted to tax credits. All sorts of terms and conditions apply to each of these types of claims. Firstly, any allowable out-of-pocket medical expenses we incurred that were not reimbursed by our medical aid, our employer, or by anybody else may be converted to tax credits. By allowable, I mean that these expenses must be payments made to registered doctors, nursing staff, hospitals, clinics, etc. for genuine medical services or treatments, or to chemists for prescription medicines. You may enter a total of these expenses right here, or you may take advantage of the itemizing grids to enter a list of your expenses in a grid, which is ideal for printing a schedule of the expenses. For example, if I click on the Itemize button next to code 4020, I will open a grid where I can enter as many different items of medical expenses as I wish. This is an example of the grid in Wintax, where we can enter as many lines as we wish, listing and itemizing all the different expenses, the dates, the reason why they were not paid by the medical aid, and the amounts. When we're finished, we simply click on the OK button, and then all the amounts in the amount column on the right will be added up and placed in the Wintax program for us next to code 4020. There you can see the total of those expenses in the grid come to 10,000 Rand, and they've been placed in the total column right here next to 4020 for us. A formula will convert the allowable out-of-pocket expenses to tax credits. We'll go into these conversion formulas in more detail later, but first let's talk about the difference between claiming out-of-pocket expenses under code 4020, code 4022 or code 4023. Code 4020 is where you claim all normal allowable out-of-pocket medical expenses for you and your dependent family. As mentioned before, these have to be expenses for genuine medical services or prescription medicines. The type of medical goods or services is limited. Allowable claims will be converted to tax credits in the 2015 tax year. Code 4022 is where the taxpayer or a dependent family member with a physical impairment can claim allowable out-of-pocket medical expenses. The difference here is that there's a wider range of allowable goods and services permitted as a claim under code 4022. For example, if an accident left you with a severe limp and you need special physio or special equipment that may not be allowed under code 4020, then you claim your expenses under code 4022. Allowable claims will be converted to tax credits in 2015 tax year. Code 4023 is where you claim out-of-pocket medical expenses if the taxpayer or a dependent has a serious mental or physical disability, handicap problem, such as being confined to a wheelchair, etc. Your allowable out-of-pocket medical expenses will be converted to tax credits if you select that someone in your family has such a handicap disability, or if you claim your expenses under Code 4023. SARS will probably require that you get an ITR-DD form completed by a physician, so keep a copy of the form with all your receipts. Allowable claims will be converted to tax credits. Taxpayers less than 65 with a dependent with a disability handicap will be treated the same as taxpayers 65 or older as far as converting medical contributions and expenses to tax credits is concerned. Note that in all our examples we will use 10,000 Rand allowable Code 4020 out-of-pocket expenses. Let's have a look at the screen where we claim tax credits and medical aid fund contributions. So we need to click on this button to show the sundry IRP5 and medical tax credits screen. This is where we will see exactly how tax credits are granted for beneficiaries and also how contributions and medical expenses are converted to tax credits. The top half of the screen with the green background looks pretty much the same as this part of the ITR-12 form on e-filing. This taxpayer had 2 beneficiaries for each of the 12 months of the tax year, and we can see the total tax credits for beneficiaries for the year of assessment as being 6,168 Rand. This amount of 6168 will be added to any other medical tax credits which may be allowed, and the total of all tax credits allowed will come straight off the tax you have to pay, in much the same way as your primary rebate reduces your tax commitment. Note that tax credits are not a deduction against taxable income. Tax credits come straight off the tax you have to pay. Remember that tax credits are non-refundable, which means tax credits can be used to reduce the tax you have to pay, but tax credits cannot push your tax commitment into a refund situation. It makes no difference if the employer or the employee pays medical aid fund contributions. The taxpayer still gets tax credits for beneficiaries and for allowable contributions. In case you get a bit confused working through SARS's formulas for converting allowable contributions and expenses to tax credits, you can always just click on the tax tip info button to refer exactly how the calculations work. If we click on this little blue info button down here, then this little screen opens, giving you hints and tips on various aspects of tax, and this particular part here tells you how tax credits are granted. You can see there for over 65 and for under 65. These are the amounts we used in our first example, where the employer paid all the medical aid fund contributions of 60,000 Rand for the year in respect of the employee. The 60,000 Rand contributions paid by the employer as Code 4474 is shown here, as well as the total contributions as Code 4005. The employer paid all the contributions of 60,000 and the employee paid nothing in this case, remember? So we have total contributions of 60,000 Rand. Please don't forget that the taxpayer we are dealing with here in this example is not yet 65. So let's see what happens now. Looking at the yellow column a bit further down the screen, we can see the tax credits of 6168 granted for beneficiaries, and we can see the amounts granted as tax credits for the allowable contributions as the 60,000 Rand contributions, less 4 times the tax credits for beneficiaries. 4 times 6168 is 24,672. So 60,000 less 24,672 is 35,328. To this amount of 35,328, we have to add the 10,000 Rand allowable out-of-pocket expenses, and we get 45,328. This is the important bit. 25% of any part of this amount of 45,328 which exceeds 7.5% of taxable income will be converted to tax credits. Remember, we've not yet entered any deductions, so our taxable income is the 300,000 Rand salary we entered plus 60,000 Rand taxable contributions which were paid by the employer. This makes a taxable income of 360,000, and 7.5% of 360,000 Rand is 27,000 Rand. As 45,328 exceeds the taxable income of 27,000 by 18,328, and 25% of 18,328 is 4,582. For this not yet 65 taxpayer, the total medical tax credits are the 6,128 tax credits for beneficiaries plus the 4,582 amount, which means the total tax credits of 10,750 Rand. In fact, if I drag and superimpose the auto summary window over this screen, there we can see the total income for tax. That's the 300,000 Rand salary plus the 60,000 Rand of contributions paid by the employer, also taxable. So the total taxable income, 360,000. According to the tables, the tax tables, the tax on that is 82,147. There's the primary rebate of 12,726, and there's the tax credits of 10,750. Giving us a tax due of 58,671. That's reducing 82,147 down to 58,671. Right, removing the auto summary window. Let's now have a look at our second example, where the employer and the employee each paid half of the 60,000 Rand total medical aid fund contributions. Remember, the IRP5 shows that the code 4474 amount of contributions paid by the employer was 30,000 Rand, and the 30,000 Rand is taxable as code 3810 and added to the 300,000 Rand salary to make a total of 330,000 Rand for income. Note that as we don't have any deductions, our taxable income will also be 330,000 Rand. Code 4005 is the code 3810 amount of 30,000 plus the 30,000 Rand contributions paid by the taxpayer. Remember, the taxpayer's 30,000 Rand share of contributions paid is not taxable. Now let's have a look at that sundry IRP5 code screen where we show how these amounts are converted to tax credits. Remember, we're also claiming 10,000 Rand out-of-pocket expenses in all our examples. The beneficiaries are the same. We have the same tax credits for beneficiaries, and we have the same total of 60,000 Rand contributions. Remember, half paid by the employer and half paid by the employee. Once again, our formula goes like this. 4 times the beneficiary tax credits is 4 times 6168, which is 24,672. Qualifying contributions of 60,000 less 24,672 is 35,328. Plus 10,000 Rand out-of-pocket expenses is 45,328. Now remember, our taxable income in this case is 330,000, and 7.5% of taxable income is 7.5% of 330,000, which is 24,750. Now 45,328 exceeds 24,750 by 20,578, and 25% of 20,578 is 5,145. So our additional tax credits are 5,145. Our total tax credits are 6,168 plus 5,145, which equals 11,312. Looking at the auto summary, here we can see the total income for tax, 330,000. Without any deductions, we get taxable income of 330,000. The tax on the taxable income according to the tables is 73,147. Subtracting our rebates and subtracting our tax credits will reduce our tax due to 49,109. Now let's have a look at our third example, where the employer paid no share of the contributions on the IRP5 and the employee paid all the contributions of 60,000 Rand for the year. Here we can see the only medical code is code 4005, showing the 60,000 Rand medical aid contributions paid by the employee. The employer paid no contribution, so there's no code 4474 amount and no code 3810 amount added to income for tax. Having a look at the screen showing the conversion to tax credits, once again our tax credits for two beneficiaries is the same at 6,168 Rand. 60,000 Rand contributions less 4 times the beneficiary tax credits of 6168 is 60,000 Rand less 24,672, which is 35,328. Add the 10,000 Rand out-of-pocket expenses and we get 45,328 Rand. Now the taxable income in this case is 300,000. And 7.5% of 300,000 is 22,500. The portion of 45,328 Rand, which exceeds 22,500 Rand, is 22,828. And 25% of 22,828 is 5,707 additional tax credits. Our total tax credits are 6168 plus 5707, which is 11,875. Let's go back to our original example where the taxpayer paid all the contributions of 60,000 Rand in respect of the taxpayer. This is our original IRP5 where the employer paid all of the contributions. What if this taxpayer was older than 65? I'll change the taxpayer's age on the personal details screen to 66. We can see that absolutely nothing changes on the IRP5. Even for older taxpayers, the employer's contribution of 60,000 Rand are still added to the salary to make total income for tax of 360,000 Rand. Let's go to the screen in WinTax, which shows the conversion of contributions and out-of-pocket expenses to tax credits for older people. We can immediately see that for taxpayers of 65 or older, tax credits are granted for medical aid fund beneficiaries in 2015. We also have a different set of formulas giving us different tax credits for allowable contributions and for allowable out-of-pocket expenses. The tax credits for contributions are worked out as follows. 33.3% of contributions less 3 times the beneficiary tax credits. Note that it's 33.3% and not 1/3. 3 times 6168 equals 18,504. 60,000 Rand contributions less 18,504 equals 41,496. 33.3% of 41,496 equals 13,818. So our tax credits for contributions is 13,818. Tax credit granted for allowable out-of-pocket expenses is 33.3% of the expenses. In this case, 33.3% of 10,000 Rand is 3,330 Rand. If you add up the 3 different tax credits granted, we get a total tax credits of 23,316 Rand. Looking at the auto summary, There we can see it's a normal situation, the 360,000 taxable income. Remember, the employer's contributions are added to income in a case where a taxpayer is 65 or older. So the income is 360,000. According to the tables, the tax on that taxable income is 82,147. The rebates have increased because the guy is 65 or older. So we've got less rebates, less tax credits, and the tax due right down to 38,995. Looking at this different example where the taxpayer, not yet 65, was not employed and lived off interest from investments or even income from private business like property rentals, etc. Let's say the taxable income here was 300,000 Rand. If this unemployed taxpayer paid his medical aid contributions of 60,000 Rand for the year himself, then we enter them here under Code 4040. Code 4040 is where you enter medical aid fund contributions paid that do not appear on an IRP5, such as our case here where the taxpayer never had an employer. If this taxpayer also spent 10,000 Rand on allowable medical expenses, then we can see that the amounts converted to tax credits are exactly the same as the earlier example where the employed taxpayer paid all the contributions himself under Code 4005 on the IRP5. If you come across a certificate from a medical aid fund which says that the fund received 70,000 Rand in contributions and the IRP5 indicates that only 60,000 Rand in contributions were paid to the fund, then the other 10,000 Rand came from somewhere, and if you look for it you'll find it. It probably came from the taxpayer's bank account, in which case you can claim the 10,000 Rand under Code 4040. Often, with something like medical aid contributions and tax credits, the best way to understand how things work is to understand what happens at salary source. Once again, probably the best way to illustrate how this all works at salary source is to use the EMP10 section in the Wintax 2015 software to see what happens on a monthly payslip and on an IRP5. This EMP10 salary checker screen in the Wintax 2015 software illustrates the monthly salary situation for a taxpayer not yet 65 who earned a salary of 25,000 Rand for the month, and the employer paid all the medical aid fund contributions of 5,000 Rand for the month. We can see that the employer granted the employee tax credits for 2 medical aid fund beneficiaries. What actually happens here is that the employee is actually taxed on 30,000 Rand, as the 5,000 Rand contributions paid by the employer in respect of the employee is fully taxable at salary source, and the 5,000 Rand is added to the 25,000 Rand salary to be taxed. The employer grants the employee tax credits of 514 Rand for the 2 beneficiaries for this month, which reduces the tax liability from 5,785 and 8 cents to 5,271 and 8 cents. Because the taxpayer is not yet 65, the employer cannot grant tax credits at salary source for contributions. The reason for this is that the formula for these credits for contributions for under 65s takes the 7.5% of taxable income rule into account, and of course it cannot be determined what the eventual taxable income will be. For taxpayers of 65 or older, it is a different story, as the 7.5% rule does not apply. If I change the age to 66, we can now see that tax credits of 1,151 Rand and 51 cents have been granted for the allowable contributions of 5,000 Rand. How did the employer work this out? Well, the formula says we first have to work out the contributions less 3 times the beneficiary tax credits. So that's 5,000 Rand contributions less 3 times 514 Rand, and that comes to 1,542 Rand. Now 5,000 Rand less 1,542 gives us 3,458. 33.3% of 3,458 is 1,151 Rand and 51 cents. Let's have a look at the annual IRP5 situation for the taxpayer not yet 65. Here we can see the annual salary of 300,000 and the contributions of 60,000 Rand paid by the employer, as well as the tax credits of 6,168 Rand granted for the two beneficiaries for each month. If we change the employee's age to 66, looking at this IRP5 for a taxpayer over 65, we can immediately see that the tax credits for contributions have been awarded for this taxpayer over 65. Tax credits for allowable out-of-pocket expenses can only be awarded on the assessment. Let's have a look at some other contribution split scenarios on the IRP5. Now, looking at the monthly payslip and the IRP5 on the same screen here for this 44-year-old taxpayer, with this new taxpayer, only the portion of contributions paid by the employer in respect of the employee is taxable. So the taxpayer will be taxed on 27,500 Rand per month. The contributions of 2,500 paid by the employee are not taxable. The employee is still granted tax credits for two beneficiaries. What if the employee paid all of the contributions as a stop order on his salary? Once again, looking at this 44-year-old taxpayer, we can see the monthly payslip and the IRP5 next to each other on the same screen. The contributions paid by the employee are not taxable, so the employee is only taxed on 25,000 Rand a month, and the employee still gets tax credits for beneficiaries.